Hey guys, welcome to today's analysis for Tuesday, September 25th. A few different things going on in the market today. One thing you'll notice is a lot of US dollar strength, as most of the pairs against the US dollar have gone down. So we'll check out that and maybe what it implies. And then also a few other things based on some of the news that was released today that I noticed, so we'll cover that as well. Before we jump into those, let's look at our news for tomorrow and also cover our terms quickly. So you can see that the news is actually pretty light overall for tomorrow. Two things to note. Obviously, the 10 a.m. red tag US dollar news is new home sales, so a big economic indicator that we'll want to pay attention to. And then 9 p.m. It's the business conference for the Bank of New Zealand. So keep an eye on both of those. And other than that, should be relatively quiet in the market tomorrow. And these are our terms, of course, which are important because we need to make sure that we're following the legal guidelines that are in place. Basically, they just say that we're not licensed or qualified to provide investment advice, and that this analysis service is for educational purposes only. Okay, so if you need to pause that to read those, go ahead, and I'm going to jump into the analysis now. Now, the first thing to note is this euro-dollar reversal sign that we have going on. And obviously we've been talking about this for a little while here, about the fact that there's definitely a reversal. It broke a key level and is heading consistently down since that break. Now, in my opinion, there's kind of two obvious options here, and I'll zoom in a little bit to make those a little more clear. So basically, we have the euro-dollar daily chart here, and we have two obvious options. Number one is that this is in fact a bull flag that is shaping, and it's going to continue up towards higher prices, perhaps all the way up to the 135 area if we do break our previous high. So that's a clear option. A flag is a pretty common pattern, and they do happen on these longer time frames pretty often with a relatively high degree of probability. However, the other obvious option we have here is a continuation of this reversal. And we can see that it's not the strongest of bars. It's not totally momentum filled. There's some tails in these bars, a couple blue stall bars in between. However, it's obviously consistent movement since this double top that we mentioned several days ago, actually getting close to 2 weeks ago. Okay, so if this continues down, it would probably be the most reasonable to target this area in the 126.50 zone, which is another thing that we talked about. Now, of course, the question is, I just outlined the two obvious things, which it doesn't take a genius to say it could either go up or it could go down. But the real question is, how do we know if it's going up or if it's going down? Well, one thing you can do, and this is not foolproof, but you could get out your Fibonacci and draw a level from the bottom to the top. And so right now we're sitting right about at the 50 level on the Fibonacci. I would say that just from a common sense perspective, if it breaks below the 50 level with a little bit of authority, it's gone too far to be just a bull flag. Now, obviously, it could still reverse. Nothing's guaranteed in the market. But I would say that if it breaks beyond 50% retracement, that means you're beyond just a typical bull flag setup where it kind of channels down slightly before it heads up. And so a close below this level with any kind of authority, to me, would speak toward high probability of actually coming back down and hitting this 26.50 area. Now, if it closes like this and tomorrow's bar is a pretty raging bullish bar, then obviously that changes, and I'm thinking, okay, this is in fact a flag, and we're headed up towards higher highs. So as far as how you distinguish between the two obvious scenarios that I outlined out, that's how I would do it. I would wait for a close below this 50 Fibonacci level with some kind of authority, or a bounce off this 50 level to make my decision. And then based off that, I would say to go long, obviously, in my opinion, if there's a good bounce with some degree of probability. And then, of course, to expect it to continue to go down if it closes well below that, and expect some decent probability on that. That's my take on the euro dollar. The pound dollar is somewhat similar, so let's look at that. So the pound is obviously also making the reversal motion. We had some topping action up here. It's certainly headed down since then. Now, obviously, the pound has been a little stronger since it hasn't headed down, where the euro has kind of gone more like this. The pound has had a much slighter move towards the downside. So potentially, the pound could go a lot farther before we say, okay, it's a definite reversal. One thing to look at is at least probably expect to close below this tail on a daily bar if you're expecting more continuation. But again, what we've kept talking about, or at least I've kept talking about, is that if pound does continue to go down, this is a pretty far level to be targeting. We're talking about 157.50, and again, let's measure that from, let's say, the bottom of this tail. It's about 375 pips. So a very large target potential with a close below this tail. And that, of course, gets me excited. So you can see that the pound obviously has a lot of down pressure. There's tons of tails pushing it down. But even with all that down pressure and things looking very bearish based on this topping action, this reversal sign, it still is just a small descending channel. It's not really a total momentum reversal until we get a close below this tail and a stronger push. Right now, it looks good toward the bearish sides, but still we're just in this little slight channel to the downside, and it really hasn't made much ground overall towards the south side. So until we see more of that, I would suggest waiting on the pound dollar because it's too unsure at this point. And I know how traders hate waiting. Of course, I hate waiting. But as far as long-term setups, I think that you need to break some crucial levels before you're willing to risk your money on that probability, that expectation that it's going to head down. And I'm not going to have that expectation, I don't think, unless something weird changes in my mind. But I'm not going to have that expectation until we at least break the previous low of this push bar here. And that's pound dollar. Another dollar cross that we like to cover that's actually a little different than the pound and the euro is the AUD. And let me show you what's different about that. So the AUD is also bouncing and making a similar shape, more similar to the euro than the pound, but a very similar type of look to the euro. But what's different is that unlike the euro or the pound, the AUD has recently had a different down period. So whereas the euro and the pound are making a run right now and are currently starting the reversal at the very top here, the AUD has already made a downward move, recovered from that, and is now actually heading down for the second time in recent history. So to me, that actually adds a level of confidence in the AUD bearishness, because for me, every time we get a bounce and then a pullback and then an attempt to bounce again, the more attempts toward the downside that a pair has, the more likely it is to get full continuation from that bounce. And that's just what I believe I see in the market. And so for me, that adds a little more confidence in this bearish rally for the AUD, because I know that this AUD weakness isn't just coming from nowhere. We've had AUD weakness in very recent history that has made some ground to the downside. Now, still, I would expect to wait until it breaks this tail here before heading short on this. But still, with double topping here and momentum to the downside, I think it could have very bearish potential, perhaps all the way back down to the 95.80 area, which is an area that we touched in, I guess, June was the last time we were here. So it made this up rally, pulled back, did not really make a higher high. I mean, technically there's a tail that made a slightly higher high, but really did not move like up here where we'd expect this slight pullback to lead to. Instead, it stayed pretty much the same area, is now making actually another attempt to the downside, which leads me to believe that there's some probability here that we could break all the way back to previous lows. Now that's totally my opinion, and something that is not to be highly expected, that just from this little push here we're going to see prices fall down to all the way to the previous low. But I think there's potential there because of the bearishness that we've seen in AUD and not all that distant past. So AUD has shown that it can be weak. It's shown that the dollar can rally against it and get it down to this price near 95, 96. And so it's not foreign territory for the AUD to get that weak and to be pushed down. And with that being said, I think that assuming that the U.S. dollar continues to gain a little strength here, that we could see some follow through all the way down to these lower levels. Now, whether you can stay in a trade that long even if it does fall is a totally different topic and something that we can get into in a different day. But still, I think that assuming that it breaks this level and assuming that there's some consistency in the dollar strength, that we could see, rather than a continuation of actually a higher high here, like we might have expected, while this rally was happening, an actual continuation of a lower low here, which is obviously the opposite of what we might have been expecting during this recent rally. So that's kind of my look at the odd. It's very it's very subject to circumstance right now, because we could see that this is just a very small pullback and is actually going to make another attempt to break this high, and we're just going to have to wait for price action to tell us that. But for now, I'm thinking that this is showing some nice momentum down to the bear side, and I'd like to see it break this low here. Okay, let's look at some non-USD crosses. The first one here is the Euro Pound, and we talked about this one just Friday and Monday. And basically what we were looking for was to see if this level is going to hold up and actually push Euro towards a higher high, since it is moving consistently up since the middle of July, or is it actually going to break down and continue this very long downward trend that's been going on. Right now, it's looking like, okay, maybe it's going to hold and actually move up towards a higher high, which to me is great. That sets up a good entry for us. But right now, this candle is not exactly the overwhelming bullish push that you're looking for if you want to jump in long. So tomorrow, maybe we could expect a retest of this level and a push if it's going to go up. That's something that we might want to look for. But even if it is going to break, here's something to remember. Even if it is going to break to the downside, this is not uncommon for it to at least test, struggle, bounce up, and then break through a little bit later on. So I certainly don't think that the story is settled here with whether it's going to break this level or not. And we're going to keep an eye on that. I'm going to keep an eye on that and see how price action develops, because either way, like I said before, there should be a good signal here based on how it reacts and what it does with this level. So keep an eye on that one. Of course, I'll be letting you know what I'm doing, but I think that could be a great long-term setup. Here's the pound yen. And you guys, I'm sure, remember when we talked about this bar right here, that was a massive reversal bar, one that we talked about, I guess, about a week ago, and said, man, this thing really looks like it's changing the game, because I was expecting, after this rounding motion, this strong bar, to at least get up to the 130 area up here. Obviously, that didn't happen. We hit that massive reversal bar, and so that was saying, okay, this up move was just to get people a little bit confused, because this thing is definitely headed down. And since then, we've seen some nice continuation. Now, I think some of you did take this short after this bar, based on what I was saying about that, and so you should be up relatively nicely since the close of this bar. It's gone about 132 pips. So good move there. Definitely honoring and showing continuation based on this authoritative bearish push and reversal sign. And to me, it looks like there's some definite continuation potential there. Now, there's definitely also some resistance. Look at this level right here, and this level is 125.50. You can see that that's definitely an area of resistance. Now, it's not multiple weekly resistance, but still a level that price has struggled at in recent history, as you can see here. So keep an eye on this level, but this is looking like a lot of momentum headed to the downside on pound yen, and that's something that might last for quite some time. We'll just have to be patient on that one and see, because if you didn't get in up here, it's a little dangerous to get in this late, but if we have a break, a retest, and continuation, we'll have another great pace to jump in, and we'll definitely keep an eye on that trade as well. Okay, I'm going to cover one more pair quickly here. Okay, so this is the pound odd daily chart, and I wanted to cover this because this is one that Casey and I have been looking at, and is an interesting little situation. You can see that I have just a very mini triangle drawn here on the daily chart, because the pound odd is struggling right now, and to me, I was pretty bearish on the pound odd. I'm thinking, okay, we have this massive rally to the downside, this crazy pullback. It tried to reverse but got pushed back up. It didn't make a higher high, and looked to show reversal signs again. So this thing is definitely going to be looking to head back down. And I still think that has some serious potential in that direction. But one thing that I'm worried about is all the odd weakness that we're seeing. If you remember, I showed you that odd dollar chart and how much weakness I see in the dollar. So for the pound odd to really fall, obviously we need the pound to be weaker than the Australian dollar, and right now the odd is just so weak that we're actually seeing some bullish push lately. So this is one that I'm going to keep an eye on, this triangle, and if we get a breakout of the triangle to the upside, this thing could actually really go for quite some time. So that's one to keep an eye on, and I think that if it breaks out of this triangle, it'll most likely break the top here and create a higher high. And then your major, next resistance is all the way up here. Could be up to 1.6, which is a pretty huge area. So that's just one I want to show you and for you to keep in mind. Now, if it breaks out of the bottom here, that's going to be a great opportunity as well, because then we're either targeting here or even really going crazy and targeting all the way down here. So pound odd is in a decision moment here. It's being indecisive right now, but it's going to have to make a decision pretty soon whether it's going to go north or south. And that's one to be waiting on and keeping track of if you follow that pair. So keep an eye on that. That's the last pair I'm going to cover today, guys. I hope this analysis was helpful for you. As always, please do leave a comment if you have any questions or thoughts. If you're seeing something different that I'm seeing, let me know. And then if you don't mind, of course, tweeting it, sharing it on Facebook, and getting it out to anybody that you can. We always appreciate that. All right, guys, have a great day trading tomorrow, and I'll be in touch with you soon.